If you've ever wondered how equity release actually works in real life, then this is the bit that most people don't fully understand, and it's often the bit that causes confusion later on. I'm Carrie Syson, I'm the founder of Your Final Matters, and I help people to get their paperwork and practical ducks in a row so that their family aren't left trying to figure everything out at the worst possible time. This is part of my equity release and later life planning series, and in this episode I'm focusing on how a lifetime mortgage actually works so that you can see what's really going on behind the scenes. Again, I'm not giving financial or legal advice. This is to help you understand the basics so that you can ask better questions when you speak to a regulated advisor. So what are the mechanics and how does a lifetime mortgage actually work? Well, at the heart of a modern equity release is a mortgage. It's secured against your main residence. There is no fixed term and it runs until the last borrower dies or permanently leaves the property. So into long-term care if there might be two of you. One of you might be in a care home and the other might be still living in the home. So unlike a traditional mortgage, there isn't a set number of years where it must be repaid. The plan will end typically when the property is sold, and so the loan plus the rolled up interest is repaid from the sale proceeds, and any remaining equity will go into the estate or to the beneficiaries. So the loan is usually settled at the point that the property is actually sold. And the key difference from a conventional mortgage means that there is no monthly repayments required, but you can make monthly payments if you choose to. You don't have to pay any interest or capital during your lifetime. And interest can be added to the loan, and they call it rolled up, instead of being paid each month. So if you aren't making monthly payments, it can mean that the loan will grow over time instead of shrinking like a regular mortgage. And this is one of the biggest mindset shifts because most people are used to debt reducing over time and not increasing. So this lifetime or this reverse concept, you don't know how long the loan's going to last. It will depend on how long you're going to live in the home. And the balance will increase if you are adding the interest onto the equity release mortgage because it's compounded. So the longer the plan runs, the more impact that compounding effect is going to have. So there are different ways of taking the money out. You could take out a lump sum. So a one-off amount could be anything like 10,000, 50,000, 100,000. It will all depend on the overall value of your house. Now this is suitable for one-time needs. So that could be for major works on your house. It might be to consolidate a large debt or for a single big project. This is often used when there's a clear, immediate purpose for the money. Another way that you might do it is to use a drawdown like a cash reserve or a pot. And this would be a pre-agreed facility, like having an overdraft or a credit limit that you can just tap into. And you only need to draw the money down as you need it in smaller amounts. Now, the advantages of this means that you pay interest only on the money that is actually drawn down, and it can match your ongoing costs. So regular care, gradual improvements, things that you might need day to day. And it's very popular in the UK. Around, 50 to 60% of clients opt for the drawdown option. And this can offer more flexibility and it can reduce the long-term costs compared to taking everything out up front. If this has helped you understand how it actually works, then you're already asking better questions than most people. And this is part of my equity release and later life planning series. So I'd really recommend that you watch the next video where I explain the cost side because that's where the real impact comes. If you found this helpful, you can follow me at Your Final Matters on Instagram and Facebook. Do subscribe to this YouTube channel and please share this with someone who might be quietly worrying or thinking about equity release, but they need to know more. Visit me at yourfinalmatters.co.uk and you can send me a message if you want to find out more about how I can help you, because getting organised now will make everything easier later. And I'm a great believer in while you have a voice, you still have a choice.